Get ready. It's time for Tap That Trade. Joining us right now, Alan Nuckman, an options pro at Agora Financial, taking on Phil Flynn, a Fox Business News contributor. At the bell, gentlemen, round number one, Nifty or not. The FANG stock surge is being compared to the Nifty 50 of the 70s. What's your decade? The Nifty 50 of the 70s, that includes names such as IBM and Coca-Cola, or the FANG'em names that are so hot right now, Apple and Microsoft, for instance?
Well, I like the Nifty 50 idea here. I didn't know the history of this. Obviously, it was a little before my time, but those stocks used to be somebody, but everybody got so worried because they got overextended and their valuations got very high for that time, nowhere near like the valuations that we've seen in the last couple of decades. But I like those stocks now because I think they offer some value because the other stocks have been up and away. But this is news to me, so it was a learning lesson about how those stocks used to be the ones, and now they're not.
Yeah, it's amazing how things change, and it really is. It reflects the world. I mean, when you look at the stock market, you look at individual stocks. There's sometimes a reflection of their times, right? And when times change and technology changes, they're the hot stocks. I mean, who's buying the railroad stocks right now? We probably should because they actually look pretty darn good here. But they used to be the biggest thing in the world. Anything with the railroad on it was like the .com stock of its day. You know, you could have a railroad going around your backyard; it would be going through the roof. But I do think there are some stocks right now in this FANG that they're incredible, but it still looks like they have room to run.
Round number two, triple threat. Once again, stocks, gold, and oil are all at multi-month highs. What's the best buy?
I think right now, the gold market is probably the best buy. I think oil's a little bit overbought here, and we're going to correct a little bit, even though I think the fundamentals on oil long-term is still very bullish. I still think we could see $50 by the end of the year a barrel. I think gasoline prices are going to start coming back up. And one of the reasons why I believe that is we're seeing demand come back in an incredible way. Gasoline demand in the United States, fell to, about 5 million barrels a day from 10 million barrels a day. But we're almost back up to 86 million barrels a day, or 8.6 million barrels a day. So a big comeback in that. And to me, that's a reflection of the global demand picture. We're seeing demand come back to normal in China, demand in Europe. So you put all these things together, I think that we have a very solid outlook for oil long term. But gold is the hot one right now.
Let's remember that tech made all-time forever highs just this week. And I like the gold pattern, the way it's breaking out above the 1750 range that had been in for a while. You could get a quick move to 2,000, and you'll see some value there. Again, the key is the dollar, but let's not give up on crude oil either. Just like Phil said, this 40 is an important pivot. So like we said a couple weeks ago, just because they've had big moves doesn't mean they can't continue to move higher, and they're in very, very strong trends.
You like those options, and I'll tell you what, you mentioned 2,000. We've been putting on an option butterfly spread where you buy the 1,900, you sell the 2,000, sell the 2,100 spread. You can put it on we were putting them on for a couple $100, probably under $1,000. It might be a little bit more right now. But if you hit that $2,000 market expiration, that's, $10,000 less what you pay for the spread. So the risk reward is very good on that. But buying the option straight out, they're very expensive. Try to buy a gold call these days. You might as well buy a car or a gold call. It's your choice.
Round number three, added value. China stocks have been added to the Russell Index. What does that mean to the market? What's your emerging trading strategy?
Well, I think what it means for the Russell's lagged behind. The Russell's down 15% still in the last year of trade. And the FXI, which tracks the China major cap stocks, is only down 5%. So I think it actually helped out the Russell, so the Russell can start to play with the big three, the Dow, the S&P, and the NASDAQ. And I think we'll see all these markets continue to march.
I think the Russell Index did reflect some of the pain of the coronavirus, where the bigger companies are going to be able to survive a lot of the economic hits.
Right.
The smaller companies might not be able to. But throwing China into the mix, I think, complicates the purity of the index.
On to your bonus round question for today, and with 4th of July coming up, what is the true fireworks ticker? Is it Snap, Crackle, or Pop? What's the true ticker?
Snap is right.
Snap is right.
Crackle is false. But the snap and the pop, I like the snap and the pop. I like a little crackle now and then.
I'm going to say all of the above.
Okay, he's saying all of the above. I say crackle is the phony.
The correct answer is Snap. I'm going to give it to you both today. Great job, Business First AM.